Welcome back to the ETF Inspector. It's Sunday, November 23rd, a little after 5 p.m. And today we are going to be looking at Roundhill's WeeklyPay. All right, we will come back to this website in just a second to use it, but people have been asking a lot for more WeeklyPay videos. They don't share trades, so I can't do daily coverage, but we can every once in a while just take a look, maybe on the weekend, something like that. So reminder, I'm on X at ETF_Inspector1. Follow me for all your ETF coverage. And so let's go ahead and take a look. We've downloaded the holdings from their website. So there's actually two different ways to get to WeeklyPay from their website, roundhillinvestments.com. For starters, you can go to our ETFs, go down to WeeklyPay ETFs, and then all the way at the bottom is WPAY. That'll take you to this. This is the main page, very similar to every single one of their other ETFs. It's the WeeklyPay Universe ETF. And it explains to you, it seeks to track the performance of the selective Roundhill WeeklyPay Universe Index. It's designed to invest in the eligible universe of single stock WeeklyPay ETFs. They do weekly distributions. They're obviously diversified because they have a large collection. We'll show you those. And seamless, rebalanced monthly, and you'll see that in just a minute. It's very evenly allocated. It's got just about a 1% net expense ratio, and then gross of 1.28%. Assets under management. So website's saying 487 when we million. That is when we download the holdings. It totals up to about 484 million when we use the most current share prices and multiply it out. It says 489, so somewhere in the middle. I would assume that 487 is pretty close. Roundhill's not the fastest at updating this portion of each of their websites, but their holdings are generally pretty good. They launched September 4th, so they're a fairly new fund. When we take a look at them, September 4th, right? So they were basically around 50. Obviously, they traded up pretty quickly and then moved up into the $56 range before the market pulled back and gave us this buying opportunity. So it's now closed at 44.16. So if you felt like you wished you bought it back when it opened at 50 and you missed your opportunity is back again. It is down almost $6 from inception day. All right, we want to, so there's I'm actually coming up with a little bit of confusion as far as when we take a look at it's supposed to be the collection of all the WeeklyPay ETFs, and we see a few new ones, GDXW, GLDW, and TSYW. When we switch over, if you go to Strategies, WeeklyPay ETFs, then you see all the single stocks that we're used to seeing in there. And so what you're seeing is Roundhill's leveraged versions of each of these funds. So for Apple, it's going to be AAPW, where in all cases they do swaps, equity swaps. So they've got what it looks like is 100% in a swap for the underlying, and then another 20 or 25% into actual shares of the underlying, giving you that 1.2 to 1.25%, or 1.125. I don't know how you want 125%. Man, I can't talk. 120 to 125%. But as we scroll down, here's those three new ones. They've got the first collection as single stocks. We see all those. We're used to them. And then macro, the Treasury Bond Weekly ETF. It does say it's new. Gold WeeklyPay ETF and Gold Miners WeeklyPay ETF. The problem is when we see these on this page, we see them on this page, right? But when we download the holdings off of here, right, you scroll down I'm actually on WPAY's page. I know I'm moving a little bit fast. You got your top holdings, and then you click download the CSV. I've already done it. When you bring it up, they're not in there. As you see, it's in alphabetical order. There's no gold miners. There's no gold regular. There's no treasuries down here. So I don't know if they're about to get added, if that's the case or what, but they are currently not showing up, and this is today's date on the holdings. So the only thing I can give you is what I'm seeing. If I added them, I wouldn't know how many shares to put, not to mention when I total up all of these weighting, it's 100%. So there's no room for 3 more funds evenly allocated within it. So maybe they are getting added very soon, but currently they're not showing up in the holdings. So but let's go back. I did want to, so I don't have a great understanding of swaps. So I started to prep for the video, and then I said, I'll just read it to people. So I asked, how can a fund have 100% in swaps and then more in stock? Here's the reason I say that. Let's just pick one. Just for fun, let's go with HOOW. A lot of people like that one. Right, when you scroll down and look at their holdings, you've got Robinhood Markets Inc. swap. There's actually 118% of the money in there. How's there 118%? I don't understand. And then another 2%. So that one's different than some of the others I looked at. I believe Apple was something like 100% and 20%. No, making me look like a liar. I don't know which ones I looked at. 77 and 42. Tesla is what I looked at. Tesla and Palantir I looked at prepping for the video. You got 95 and 25, 100 and just about 20. There's the one I was remembering looking at. Okay, so I said, how can a fund have 100% in swaps and then more in stock? A fund can appear to have more than 100% by using derivatives like swaps and leveraging them. All right, swaps allow a fund to gain synthetic exposure to an underlying without the direct purchase, and when combined with other strategies can result in overweight position that appears to be over 100%. So synthetic exposure with swaps, a fund can enter into an equity swap with an investment bank. So this isn't some just random or just something that's available to all of us anytime. You've got to have access here. So the fund receives the cash flows based on the performance of the stock, specified stock or index, gaining exposure without actually buying the shares. In return, they do have to pay a fee or a fixed interest rate. So it'd be nice if we could find out what that percentage is that they have to pay on these swaps. This creates a synthetic long position, and the fund can profit from the stock's performance. So then the leverage comes from, for example, a fund could have $100 million in assets. So there's $100 million in there. It could actually use $100 million in swaps to gain access, and then also use $50 million in direct stock. So they don't actually, they're basically, I guess an easy way to think of it, it's almost like similar to margin, but not exactly, right? So they basically can have access to $100 million worth of swaps without having to give up the $100 million, leaving the money still in their account so they can then buy more shares, which gives them a greater than 100% strategy. So that's what they're doing here. Okay. And so then for there, they've got a whole collection. It appears they basically are always going for 1.2 times or 120%. It's not always 100% and 20% as we saw. One was 118 to go with 2. So it's all they're adjusting them as needed. All right, so I have clicked the holdings like we said. It looks like that's not really much to look at. So you guys know I like to make my own spreadsheets. And so I've taken that information and made it a little bit easier to read, added some information to it. So I've added the share prices of each of the underlyings so we get a feel for where they're trading. We've got our market values, our weights, and like they said, evenly allocated. That's about as even as I've seen, basically 5.1 to 5.3% kind of across the board, with the exception of the First American Government Obligation Funds and cash, which obviously we wouldn't expect those to be evenly weighted. Next, what I did was went to, let me find it, Roundhill's most recent announcement, the distributions that went X on the 17th and paid on the 18th for all of the underlyings within this, all of the individual weekly paying funds. and I entered all of them in to this chart. So I've added to the chart, put all the distributions in, and then from there multiplied the distribution by the number of shares to get the amount of money that came into WPAY based off of what they received from all the distributions. And as you can see, line by line, we've got the hundreds of thousands of dollars coming in. And with them being evenly allocated, it's very easy to quickly pick up on which ones are paying the most. Just running down the line real quick, you can see, as low as and expected, $104,000 came in from Berkshire Hathaway's BRKB fund. We would definitely expect that to be a low volatility, low payer. But then we've got, is 472 going to be the highest from MSTR? Couple of 300s, 360 from Hood, 360 from Coin, or 356. So MSTR weekly paying the highest, 472,000. So all in all, they collected $4.5 million this past week. Now, the thing with Roundhill is they're always on a week delay, so I don't believe that the money that collected from this week would go towards the announcement that's coming next week. And when we look, let's go back to their page. I believe Monday is declaration day for WPAY. We can scroll down to distribution calendar. The 24th is declaration day. All right. So the way when I've covered Roundhill before, it's not actually what they did last week, but the week before. Only problem is that gets real difficult with trying to look backwards to find how many shares they had at the time compared to now. So this is ballpark type numbers. This is the amount of shares they have currently. This is the amount of payments they would have received this week. It's just this payment that's about to get announced isn't based off these numbers. It's off the previous. So, but we can assume that it's going to be fairly in a range. Okay, so when we look at outstanding shares, there's just over 11 million. So when we take all these $4.5 million dollars received from distributions and divide it by 11 million outstanding shares, they basically received 41.1 cents per share that you guys own, that we own. I own WPAY as well. Like we said, this totals up the assets under management. If you total up their holdings information, it comes to 484. If you look at their page, they say 487. And if I actually change, instead of copying these market values, if I multiply out the price times the shares, the market values all change slightly, and it comes up to 489 million. I feel like that one's definitely not correct, because that would actually turn your NAV into like $44.30 some cents. That's higher than the share price. You're not going to get to buy this for 16 cents less than what it's even worth. That's not the way it works. Generally, they have a premium on them. So I would assume it's probably close to that 487 million, which would bring this closer in around low 44s, and it would just be a small premium. But so if they turn around and distributed 100% of what they bring in, the 41.1 cents, that would be a 49% annualized yield on the payment. Again, if we take a look back, we are used to higher payments than that, all except for the most recent one last week was a good bit lower, 39, nearly 40 cents, compared to some high 50s and low 60s. So 41's not necessarily off the mark based off the last payment or so. So let's see, is there anything else worth talking about? So their website's really cool. It's definitely nice as far as if you go to this other one, we click on strategies and WeeklyPay, you've kind of got access. They're all links to each of the single stock funds that fall within WPAY. Again, I'm assuming these are going to be added very soon. But when you look at this universe fund, it does not show all of those three new ones in there. So, and again, these clickable links, they got two different times you can take links back to the other pages. So I don't know. Let me know what you think. I like WPAY. I was trying to warn people, though, back when WPAY was flying high. I said it's going to do great. It's going to outperform the market in an up market, but it is going to underperform. It's going to drop harder in a down market. So, I mean, they're looking at 21% off their peak right now. For me, it's a buying opportunity, so I'm buying more. That's not financial advice. Obviously, if the market keeps going down, this will keep going down, and the distributions will keep going down. If the market recovers, this will recover at an even faster rate because it's at 1.2 times. So, all right, so I'll give you a guesstimate of about 41 cents a share, maybe 40. I'm not sure that it makes sense for it to pay out 100% of what it brings in. But in order to not get taxed, it's got to pay out at least 90%. But that's over the course of the year. So, but in this case, since they're not selling options or anything, they are bringing in everything they bring in. You know, they got to pay out at least 90%. So, let's take like I don't want to call it worst case scenario and then be wrong, but I'd say a worst case scenario is take this times 90%. And say 37. Let's see. So 37 cents I would call like the low end of this week's payment, but 37 to 41 cents would be my guesstimate for that. And as you can see, I didn't read them all, but you got Apple, AMD, Amazon, ARM, Avgo, BABA, Berkshire, B, obviously, Coinbase, Costco, Google, Robinhood, Meta, Microsoft, MSTR, Now Strategy, Netflix, NVIDIA, Palantir, Tesla, and Uber. So you can buy each of these individual funds if you only like certain ones, or if you want to be diversified, you can just buy WPAY and get all of them in one at about 5-ish% each. All right, thank you for watching. But don't think I did not mean to click on that. So that's just about everything I've got for you. So again, thanks for watching. Hope you like the content. Go on X as well and follow Roundhill to get all these announcements for all the distributions. So have a good night and good luck trading tomorrow.